The VA loan is the single most powerful mortgage product available to anyone in America right now, and most veterans either don't know they have it, don't understand how it works, or got fed so much bad information that they gave up before they even started. Here's a number that genuinely makes me angry. A Navy federal survey of over 1,000 veterans found that while 92% had heard of a VA loan, 55% still believed there was a down payment required. More than half. And on average, each person held more than 2 misconceptions about how the program works. That means the majority of people who earn this benefit are either not using it or using it wrong, and that's costing real families real money. So here's what we're going to do. I'm going to walk you through exactly how a VA loan works, who qualifies, what the funding fee actually is and whether you can avoid it, and then I'm going to explain the one concept, entitlement, that trips up almost everybody, including some loan officers. And toward the end, I'm going to bust the myths that I hear every single week from veterans who almost walked away from homeownership because someone gave them the wrong answer. Quick note, if you're a veteran and you're not sure whether the VA benefit applies to your situation, whether you used it before, whether you qualify, or whether it's the right move, there's a link in the description to schedule a free strategy call with me. I work with veterans every day, and I'll give you a straight answer in 20 minutes. Most lenders give you a rate, I give you a strategy. And when it comes to VA loans, that's the difference. The difference is everything. So let's get into it. Okay, so let's start with what this thing actually is, because I think a lot of people hear VA loan and picture the government handing you a check. That's not how it actually works. The VA does not lend you money. Private lenders do. Banks, credit unions, mortgage companies. What the VA does is they guarantee a portion of that loan, roughly 25%, which means that if you stop paying, the VA steps in and covers that lender's loss up to that guaranteed amount. That guarantee is the whole engine because the lender's risk drops dramatically and they can offer you terms that no other loan program can touch. We're talking no required down payment with full entitlement, no monthly mortgage insurance ever, and typically more competitive rates than conventional loans. I had a client last year. He's a young E5 out of Fort Liberty and never owned anything in his life, thought he needed to save up for years before he could buy a house. His buddy told him he needed 20% down. So I go and I pull his certificate of eligibility in about 3 minutes, ran his numbers, and he closed on a home with nothing out of pocket for a down payment. When I showed him the side-by-side of what he'd pay monthly compared to a conventional loan, just the mortgage insurance savings alone, he literally said, "Why didn't anyone tell me this sooner?" And honestly, I hear that more than anything else in this job. Now, who actually qualifies for this? The short answer is more people than you can think. And if you serve 90 consecutive days of active duty during your wartime, you likely qualify. Peacetime service is 181 days. National Guard and Reserve members need 6 credible years or 90 days of active duty service. Surviving spouses of veterans who died in service or from a service-connected disability may also be eligible. And here's something people miss. Your discharge status matters, but even if you didn't get a perfect discharge, you might still qualify. Hardship discharges, medical discharges, early out with 21 months on a 2-year enlistment, all of those can still work. Don't count yourself out until a qualified lender actually pulls your certificate of eligibility. That document is the key that unlocks everything, and most of the time your lender can pull it electronically within minutes with just your social security number and date of birth. Okay, so here's the part that trips everyone up, and honestly, this is where it all clicks. Entitlement. Your COE, certificate of eligibility, is going to show a basic entitlement amount of $36,000, and veterans see that number and panic. They think that's all they can borrow, and it's not. That $36,000 means the VA will guarantee up to that amount on loans up to $144,000. But here's the thing. Almost nobody's buying a $144,000 home anymore. So the VA created what's called bonus entitlement, sometimes called second-tier entitlement, which kicks in for any loan over that amount. Now, if you have full entitlement, meaning you've never used your VA loan before or you've fully restored your entitlement, there is no VA-imposed loan limit. Let me say that again. No limit. You can borrow as much as a lender will qualify you for based on your income, credit, and debts, and the VA will guarantee 25% of it. Now, The conforming loan limit in most counties for 2026 is $832,750. But that number only restricts you if you have partial entitlement, meaning some of your entitlement is still tied up in another property. For veterans with full entitlement, that number is basically irrelevant. I had a veteran client in Northern Virginia a long time ago who was convinced that she could only buy up to about a $400,000 home with a VA loan. And when I showed her that full entitlement, she had no cap. And we ran her income numbers. She ended up purchasing a home well above what she thought was possible with no money down. The look on her face, yes, that's why I do this. And if you're watching this right now and you're starting to realize that you might have more buying power than you thought, that's exactly why I made this video. If you want help figuring out your specific situation, schedule that free call. The link is right below in this video. I work with veterans every single day, and I'll give you a straight answer in 20 minutes. Now, let's talk about the funding fee, because I know some of you are thinking, okay, what's the catch? The funding fee is a one-time fee the VA charges to help keep this program running for future generations of veterans. It's not a monthly mortgage insurance. You pay it once at closing, and you can even roll it into the loan so it doesn't come out of your pocket. For first-time use with no down payment, the funding fee is 2.15% of the loan amount. Subsequent uses jump to 3.3%. But, and this is huge, if you make a larger down payment, the fee drops. And here's the part that a lot of people don't know. If you have any VA disability compensation, even 10%, you are completely exempt from the funding fee. Purple Heart recipients on active duty, exempt. Surviving spouses receiving DIC, exempt. And starting in 2026, the VA says the funding fee is now tax deductible for eligible borrowers, which is a brand new benefit. Also, and I've seen this happen multiple times, if you get a VA disability rating after closing and it's backdated to before your closing date, you can get that funding fee refunded. The VA won't do it automatically though, so you have to request it. So if that's you, don't leave money on the table. All right, let's bust some myths, because there are the ones that I hear constantly. Myth number 1, you can only use your VA loan once. That is completely false. This is a lifetime benefit. You can use it over and over and over as long as you restore your entitlement. And there are multiple ways to do that. Sell the home and pay off the loan, have another veteran assume it, or use your one-time restoration to refinance into a conventional loan and keep the property as a rental. Myth number 2, VA loans take forever to close. Not true anymore. Average mortgage closing times today are running around 42 days across the board, and VA loans are right in that range. A good lender who knows the VA guidelines can actually close these things more efficiently. Myth number 3 is that sellers actually don't want VA offers. You know, this was more of an issue a few years ago in the crazy sellers market, and honestly, some of it was based on ignorance about how the VA appraisal process works. But here's reality. A pre-approved VA buyer is a strong buyer. Absolutely. And myth number 4, you actually need perfect credit. Listen, the VA itself sets no minimum credit score. Most lenders look for somewhere in the low to mid 600s, and some will even go as low as 580. If you've been told you don't qualify, it might just mean you've talked to the wrong lender. So look, if you made it this far and you now understand the VA loan better than most people in this country, including a lot of real estate agents, this is a benefit you earned through your service. It exists specifically so you can build wealth through homeownership, and the numbers show it works. Veteran homeowners have significantly higher net worth than veteran renters. And if you're a veteran and you're not sure whether the VA benefit applies to your situation, whether you've used it before, whether you qualify, or whether it's the right move, schedule a free strategy call with me using the link below. I work with veterans every day, and I'll give you a straight answer in 20 minutes. If you found this helpful, hit the subscribe button. I've got a lot more VA content coming that builds on everything we've covered today. I'll see you on the next one.